I want to talk to you about the gold price today, because this week the gold price reached a record high. And that was a record high, only slightly higher than normal. It has been hovering around the $2,000 for quite a while. But this comes amid bank failures in the US, another one, rate rises in the US and the European Central Bank, and we're expecting rate rises in the UK as well. Okay, so the price of gold reached an all-time high of $2,081 this week. It's dipped back since then. I'm going to just show you what it has been doing, or if I share this screen. But if you like this kind of content, please like and share. Please put it out there to the world. And if you're interested in taking things further and learning more about investing, saving, managing your money, please click on the link below and join one of my free training webinars. So I'll just try and share the screen here. Right, so we've got the gold price here today, Friday the 5th, it's $2,011, so it's dipped down. You can see that peak there on the 3rd of May, it just peaked up there, but it's come down again, right? So, and if we look at, say, this is just a week, but if we look at, say, 3 months, you probably get a clearer picture. It has been going up, as you can see. It's been going up quite steadily from a low of around 1,800, so it's gone up quite a bit. Gone up from 1,800 to over $2,000. So what's that, like 10%? And this comes, as we're looking at the fears ahead for the economy. We're looking at uncertainty in the world, bank problems, interest rates going up, inflation still high. Gold normally does quite well. I'm just looking here over 6 months. You can see it went up again, went down. So it's not, gold is a safe haven in terms of money over the years, but it can be volatile. Look, you're looking at that over a year now, and gold can go up and down. And if you look at gold over a longer period, maybe 10 years, you can see that there's a pattern there. I mean, it did stay low for many, many years. And a lot of people argue, well, yeah, it's okay saying gold is the safe haven, but after the last crash, it didn't become the safe haven. So you can see here that it was down for a long, long period of time. Yeah, you could have bought gold very cheaply there, half the price, in fact, but that was quite a while ago. And if we look then at other metals like silver tends to be the poor relation of gold, but it can also be a good investment. But the silver is also very volatile as well. So you can see here over a year, silver up and down, up and down. And then if we go back to a 10-year, which to compare it with the gold, you can see over 10 years, yeah, I mean, it's really up and down, isn't it? A lot of jagged edges. I mean, you can't see this on Facebook, a lot of ups and downs on the silver price. So you've got to be very careful there. Let's go back to the other story about the bank failures. It's quite a serious thing, because we've seen 3 banks go down in the US, and this means that there's problems there. Now, these are not the big banks. These are not the City banks, the JP Morgans. These are the smaller regional banks. But I say small. One of them was the 14th largest bank. Silicon Valley Bank was the 14th largest bank in the US. So it's not just some little building societies. We have them in the UK, or some micro bank. This was quite a big bank with hundreds of billions of depositors, dollars. So yeah, it was a big story. And this week we've seen another one get into trouble. This is the California-based PacWest Bank. PacWest Bank, and their shares went down by 50% down in shares. I want to show you it. I'll just show you on the BBC News, because it's the easiest channel to navigate around. Yeah, we had elections this week, big climbs for Labour. They've taken over a lot of the local councils, local authorities. That is a sign that Labour is getting excited. They can smell power. They can smell the end of this Conservative era, which has been since 2010. And they can signal the end of that and go back to a long period of Labour. But whatever your politics, it does normally mean higher taxes, especially for people who save and invest and buy to lets and all that sort of thing. Let's have a look here at the news on these banks, which was there earlier. Yeah, the banks. This is a bank that has now been bailed out by JP Morgan. JP Morgan is one of the big banks, and JP Morgan have taken it over really to just try and steady the market. It happens in the UK as well. If a bank is in trouble, usually one of the bigger banks will go step in and take it over. When Silicon Valley's UK branch of Silicon Valley Bank was in trouble, HSBC bought them out. Rates in the US, as I said, gone up to the highest level in 16 years. You see here, US interest rates. And then the European Central Bank put up their rates by 0.25% as the US did. And the UK is bound to follow next week. I just can't see I just can't see how they wouldn't. But experts tell me that is where it might end, that rates will peak at that rate. And as inflation comes down in the next few months, rates should come down again. So SVB, Silicon Valley Bank went down. Are UK banks at risk? These are from the experts here saying, that the shares have had a wobble, but we don't expect a major collapse here. One of the problems with the American regional banks is that Janet Yellen said that we can only bail out so many banks, and they're probably going to be the big boys. So a lot of people are pulling their money, their deposits out of those smaller banks and putting it with the big banks. That's what you do, isn't it? Now, one way of keeping an eye on your bank, if you're worried, is to set up a Google alert. Just say, set up a Google alert for that bank. Any stories about that bank, tell me about it. Send me an alert. So if the bank shares are falling, as they have done with PacWest and Western Alliance is another bank plunged by 40% as depositors are losing confidence. And once people start pulling their money out, everything tumbles then, because the banks haven't got enough money to pay all of the depositors. Why? Because they lend all this money out several times. So for every dollar they get in, they're probably lending it out 10 times. So they haven't got the money when people come in and ask for that money back. It's called a run on the bank. And this is why you have the regulators set up deposit protection schemes. In the US, it's $250,000. And this is why in the UK, it's £85,000, but I think that will be increasing soon. So that's what's happening there. Set up a Google alert if you're worried about your bank in America. I wouldn't be keeping too much money in any regional bank in the US. Is it the end of the banking as we know it? I don't think so. I don't think we're going to see a major collapse of big banks like we did in 2008, Bear Stearns and Lehman Brothers. But you just never know in this market. And that's why a lot of people are putting their money into things like gold, because they're uncertain about things. They're not certain about property. They're not certain about the stock market, which it seems to be peaking. And then, some of the investors put their money into things like gold, which is seen as a safe haven. But is it a safe investment? Well, I showed you on that screen there that gold can go down as well, and gold can stay down for many, many years. But gold buffs, I'm just thinking of the likes of Peter Schiff and people like that, saying, oh, gold, get into gold, because they're actually involved in selling gold. So I'm not sure if you can treat their tips and advice as purely impartial, because they're involved in the gold business. So there you go, you take your choice. But they're saying that gold could go up to $10,000. What they seem to be arguing is that somehow the currency, the dollar, is going to just collapse, and that there's going to be this new currency which is backed by gold, right? Backed by this gold, right? I don't know if that's going to happen. I don't know if there's enough gold in the world to do a gold-backed currency. Russia and the BRICS nations, the Brazil, Russia, India, China, South Africa, and others who are in that group, seem to be setting up some kind of gold-backed currency. But how do you know how much gold these countries have got? Can you really trust these markets? Can you trust these countries to give you the right facts? Can you trust China even to tell you the truth about what's going on? So whether you'll see the dollar completely collapse, I don't know. I think what we are going to see is that the dollar will no longer be the reserve currency of the world, because countries are now buying things that you normally had to buy through dollars between themselves. They're buying it using the RMB in China. They're using their own currencies to buy these goods. That could be the end of the dollar as the reserve currency. A lot of people are predicting that. It's been the reserve currency since the end of World War II. But then, you know, if these other currencies that people are using to buy, if they lose confidence in those, they might go back to gold. But there's definitely a big shift taking place here. We're seeing a shift of power away from America over towards the East and China and Russia. We're seeing a big power shift. Maybe it's the end of this American empire. And one of the reasons is that the US Federal Reserve and the government have just been printing a lot of this stuff, and it's devaluing the value of it. You know, it's going down by, the buying power of that dollar is going down by, well, it was going down by about 10% a year. Certainly the pound in the UK is going down by about 10% a year. Now that could change. Wholesale gas and oil prices the fall in those prices should be passed on to consumers in the next month or two, and we should see inflation go down maybe by a couple of percent. But still, it's still a lot of devaluation of your spending power over time. And this is what gold buffs argue, that if you look at gold since, you know, the beginning of time for thousands of years, that it's maintained its buying power, and then it's not the gold that's fluctuating, it's the currencies that are fluctuating. That's another story. But there was a time when, you know, this was backed by this, and you could say to and the old notes used to have on them, written on them, the bearer of this note can exchange this note for the equivalent value in gold. So you knew that a pound bought you a certain level of gold. Now on the new notes now, they don't have this, you know, it's not there. But when I was a kid, that they showed it to me. They showed an old note of, you can go down to the Bank of England and get this gold. And where that started from, to cut a long story short, people used to carry gold around all over the place. And then people like, I suppose the Rothschilds and that sort of ilk said, no, we'll keep your gold in a vault and safely, and we'll give you a bit of paper. And there's evidence of this, that they would give them a bit of paper to say, this is a certificate for your gold, a gold certificate. So that, and then they could exchange that with somebody else in another place, and they could go back to that gold reserve and get the gold out. But then they decided, well, people don't really come back to their gold that often, so why don't we lend that money out, and then we'll lend it out again because no one's coming back for this. And this is where fractional reserve banking started. So it was backed by gold, but it's no longer backed by gold. Richard Nixon took the US dollar off the gold standard in around 71. I'm not sure when it took place in the UK, but at the moment, these are just really bits of paper, and they can print it and they can devalue it, you know. So this is the problem. I think this is why countries are losing faith in gold. They're holding in dollars because they're holding all these dollars, US bonds, and they're being devalued because they're printing more and more of them. So what should you do? I mean, I'd say if you're interested in finding out more about investing, you know, do join my training webinar. But in general, I wouldn't put all of your money into something like gold, because the gold is fine. It's there as a store of value, but it doesn't give you interest. It doesn't give you income unless you lend it out in some way. And you know, it's something as a safe haven. So maybe somebody might want to have 5 or 10% of their portfolio in some gold coins or silver coins. I've got silver coins as well. And there. Now, will the interest rates, getting back to interest rates, will they cause a fall in the value of property? I don't know. I think the market has probably factored in these rate rises already. And even the mortgage market seems to have factored in the fact that they know that interest rates will be going up next week by about 0.25%. So it's not going to cause any major panics as it did last year when mortgage rates shot up during the Kwasi-Kwarteng chancellorship. But things have settled down now. So I don't know. I know the market has slowed down. The market has been going down steadily as interest rates have been going up, which is the normal thing that happens. But I think we could see an end of this problem towards the end of the year. And in the meantime, there will be opportunities to buy properties that have been sitting around for a long time. They can't sell them. And I'm sure there will be opportunities to buy some properties at knockdown prices. But I don't think you're going to get a property or at half price, unless there is a major crash, like a major stock market crash or a war in Taiwan. Then we're going to see the crash of all time, all crashes, like a 1929 situation. But until then, we're going to see reductions, but there will be opportunities. There's a lot of empty commercial properties at the moment. There's a lot of commercial properties that need to be repurposed and turned into maybe a residential or some other purpose. So there are opportunities out there, but I would be very cautious about anything at the moment. Just keep it steady. Don't do anything too drastic, and do join me. I mean, let me ask you a question. What is your biggest worry, money? Well, people in America were asked that a few years ago, and their biggest worry, actually not money worry, their biggest worry was running out of money, not health or anything else like that, or dying. They were worried about running out of money. Now, I want to show you how you can, change that and not be so worried about money and learn how to manage your money, get it under control, start investing and building wealth, and then maintain that consistency over a period. It's called my 3 steps to success money management and wealth building. So I'll put a link up to that, and please do join me. It's a free training. It's usually on a Wednesday night. If it's not this Wednesday, it'll be the following Wednesday, depending on when you're watching this. And I'll go through my 3 steps to success money management and wealth building to show you how to build wealth